All right, so Ethereum just did something it has not done in 90 days. It beat Bitcoin, not by a little either. And look, everyone is staring at $2,000 like it is the only number that matters. It is not. By the end of this, you will know the exact level Ethereum actually failed at today, and the one I am watching to say this rotation is real. And as always, a quick read on the market first, because this one matters today. Bitcoin is doing nothing, just under 64,000, down about 2.5% on the day, and it has been stuck between roughly 58 and 67,000 for a month. It is still miles under its 200-day, which sits up around 72,000, so that is your backdrop. Bitcoin is chopping sideways. Now hold that thought, because Ethereum is absolutely not doing that. Here is the 4-hour. Ethereum opened today at 1954 and ran straight into 1982. That is the first time it has been above 1980 in 55 days. And then it got hit. The midday candle dumped it all the way down to 1919. And I want you to look at the volume on that candle, because it is 4 times the median. That is not noise, that is real selling. But here is the bit most people are going to miss. It got bought straight back all the way to 1956. Then it faded again into the close, and we finished the day at 1892. So the low that actually matters is 1883, and that is still a higher low than yesterday. The swing lows since the 13th go 1750, 1847, 1883. That floor keeps lifting. Now, the level. Everyone is saying 2000. The level Ethereum actually failed at today is the 100-day moving average at 1958, and it closed back underneath it. That is the gate. Reclaim 1958 and 2000 is just a number on the way through. Lose 1883 and we are back testing 1857. And I am not the only one watching this. 𝗀𝗶𝗴𝗙 posted this chart yesterday, and it has done 25,000 views for a reason. His read is that Ethereum against Bitcoin is breaking the downtrend it has been in since January 2023. Now, I cannot verify a 3-year trend line off my own data, so take that as his call, not mine. But what I can verify is what the ratio actually did, and honestly, it backs him up. This is Ethereum priced in Bitcoin. When this line goes up, Ethereum is winning. Yesterday, it closed at 0.0299, which is a 90-day high, and today it pushed higher again intraday to 0.0302 before easing back. You have to go back to the 28th of April to find the ratio up here. It also crossed back above its 200-day yesterday, first time in this whole series. And that is the one that actually matters, because a ratio above its 200-day is the difference between a bounce and a trend. Put some numbers on it. In July, Ethereum is up about 20%. Bitcoin is up about 9%. That is more than double. And to be honest, these line up with the signals I saw on CoinGPT earlier today, the AI tool I use for this. And I will show you exactly what it said in a minute. So why now? 2 things. The ETF flows finally turned. Week of the 20th, Ethereum funds pulled in $103.9 million against 33.8 for Bitcoin. That is roughly 3 to 1, and it broke an 8-week run of outflows. Tom Lee is pointing at the same ratio and calling it a strength signal, and Bitmine bought more Ethereum again today. I will give you the other side though, because it is not all one way. BlackRock clients sold 52.7 million out of the Ethereum trust on the 25th. So the bid is real, but it is not unanimous. And this is the part that decides it, not 2000, 1958, that 100-day, because Ethereum can tag 2000 on a wick and still be weak, but a daily close back above 1958 with the ratio holding is a completely different picture. Quick one, I've moved my trading over to WEEX, no KYC, crypto and traditional markets in one account, and there is over $10,000 in sign-up rewards on the link below. It also plugs straight into CoinGPT, which is handy. Right, so this is what I meant. I ran Ethereum through the CoinGPT coin scanner just before recording. Overall read, strong bullish, 6 bullish signals against 3 bearish, 9 out of 37 firing. But look at how it splits. Low time frames, 9 bull 5 bear. Mid, 7 bull 2 bear. High time frame, dead even, 3 and 3. So the dip is getting bought on the fast charts, and the big picture genuinely has not decided yet. And if you want to act on it, you can execute straight from there with your stop loss and take profit already set. So here is where I stand. Bias is bullish while 1883 holds. The trigger I want is a daily close back above 1958. That 100-day. Get that and 2000 opens, and the real target above is the 200-day at 21.35. Invalidation, and this is the important bit. If we lose 1883, then 1857 is next. And if the ratio rolls back under its 200-day at the same time, then the rotation call is wrong. And I will say so. Not financial advice. This is what I am watching. If this saved you some chart time, subscribe. I do these every single day. WEEX is where I trade now. No KYC, crypto and TradFi together. 10,000 plus in rewards on the link below.